Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I did post a lot of stuff myself on there about oil, so we'll go over a lot of oil stuff. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, see what people are sharing. You want to follow me at Finance, and if you want to join our community, finding-value.com. We do have a question and answer session later today at 5 p.m. Mountain Time if you'd like to join. There's a couple of things that they wanted me, that the group, the community, wanted me to cover. Fundamentals of a company, risks in each sector, and I'm going to really dive into some of this stuff so you guys can understand at least my viewpoint. It's probably going to be very different than maybe other people's viewpoints. So we are going to cover some of that stuff. We do have the discount coupon code that's active in the description link below if you'd like to try it out or sign up to the yearly membership with a larger discount. So the first post I have here, it says some deficits for silver, copper, and uranium. I also put on there platinum Chinese investment demand for a kicker, for the heck of it. So when I look at these charts here, and we'll just kind of go through them real quick, it says global outlook for primary copper demand and supply. When we get to 2024, we're basically at the beginning of what's going to potentially be a potential shortfall. The shortfall will ramp from 2024 into 25 and so on, larger and larger deficits. The way the market handles this is it will kill demand through price. So one way that you can look at these markets and you look at this particular chart here is that we are shifting from a cost, like looking backwards over here, where you get these surpluses and then you kind of go back and forth. You're basically going between a slight demand destruction if it's above it, and then you get mainly you're riding the cost curves and cutting back on supply over here. So we've been riding the cost curve for many, 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 many years. And that's where you get these surpluses, and it cycles about the demand above and below is where it will cycle over time. And projects come online at higher prices, and then they cut back if the prices get too low. When you get permanent shortfalls like this, potentially permanent shortfalls, what that means is you're not riding the cost curves of the higher marginal producers. We could be switching to demand destruction. And if there's no projects that are coming on to meet this potential shortfall by 2030, demand will have to be it'll have to be priced out. So that means much higher prices. And I don't think people understand the ramifications of this. We're going from an abundance potential mindset to maybe something that is a lot less abundant, more of a scarcity mindset. And people or companies may react differently to that. Another thing to think about is when I look at the shortfall on copper out here, people are going to say, "Oh, copper is going to be a wonderful investment." I agree with that. It is. But my thing is, I look at this and I say, well, this is going to need a bunch more mines. The copper price will send a signal to everyone that says, build more copper mines. I want to build more copper mines across the world. That's also going to send a signal for those that are going to build mines to go buy more equipment, to go buy those big, front loaders and all those big machines. And then what I think about in my mind is, man, that's a lot of energy. And not only that, they're going to have to move more tons of earth to get the same pound of copper or kilogram of copper, however they measure it. And it's going to take a lot more energy. unless we get a lot more efficient with our energy use. So when I look at this, I just think huge energy demand out in the future when we get these shortfalls. Here is the WNA uranium supply demand for the upper scenario. And a couple of things I want to talk about here. There's a gap between demand and supply, that's the green. And you can see there's a little bit of green through here. The supply is obviously projected. And there's a lot of companies that are not hitting their supply expectations, their production figures. The big boys, Cameco and Kazatomprom. So if they're not hitting it, well, this supply may not be as high as what we think it is. So there might be more green in the demand supply deficit pushed to the left. But look how big it is up here. You know what that means? We need to build a lot more mines, a lot more mining of uranium if that's what we want to do to meet that demand for the world. So here's another question then. Well, isn't that all energy demand for oil, diesel, building all these mines and natural gas and electricity and all this other stuff? Yep. So it's just more energy demand out in the future, scattered throughout the world. So copper, we need to build a bunch more projects if they exist. And then uranium, we're going to have to build a bunch more projects if they exist. Now, if they don't exist, I mean, obviously, we're going to have to come up with other means of getting the uranium if that's what we want to do and the price is sufficient enough, maybe getting it from the ocean or wherever. But that also means that it might be delayed. So we could get a gap here that blows out, the price goes way up, but there's no response in supply for a period of time. So what's going to cover that area where there's a gap in time? You know, projects coming on and maybe they're 3, 4, 5, 10 years out. What's going to happen between the price rocketing and the gap between the supply coming online? Well, we're going to have to look for alternatives, right? Well, what's alternatives? Other energy sources, natural gas, coal, all of those things will come online if we have problems producing uranium for the demand for nuclear, if it can't come online fast enough. Keep going to the right. This is the silver market heads for the 4th straight year of shortages. Shortages. Second highest deficit on record forecast for 2024. Deficit, and we're running a little bit over 200 million ounces in deficit. So here's my question. What are we going to do? Well, price will go up, which it is, and we're going to have to build more mines. Okay, so we have to build more mines for copper. We need to build more mines for uranium. We need to build more mines for silver. And what is that going to take? It takes a lot more energy. And then most of the stuff that's going to come online is lower ore grades. And you know what that means? More earth is going to be moved for less ounces or pounds or kilograms of silver. The cost curves are going to continue to go up. And we need to build a lot more mines, which is going to consume a lot more energy just across the board. So what if I invest in energy, which is all before all these, you know, it's earlier in the supply chain, we'll call it. And whatever energy that gets produced can be used for anywhere in the world. I think that's a really good bet, especially if the margins are really good. And then this is China's total platinum bar and coin demand has increased 8-fold over 5 years. Kind of looks like my holdings of platinum myself. I started buying just small amounts in 2019. I really loaded into it 2020 onward. And during certain periods, I would continue to buy it and accumulate it. And now this would be my stack accumulation, not in thousands of ounces, but yeah, this is what's occurring in China. They're doing the same thing. Seems like very similar. So sticking to the energy theme, this is ExxonMobil, and I'm just asking, bullish or bearish long term? So what you generally have, and I'm going to go to ConocoPhillips first, so you guys can see I've got a little bit more data here. What you generally have is you get these sideways periods where it says 1, 2, 3. That's called a consolidation. So we got a big move in the 60s and 70s, consolidation, big move, early 90s, all the way up to the peak of 2008. Then we had a huge consolidation. And then we broke out of that consolidation here in 2021, and we've been consolidating sideways for the past maybe 2 years. That circle is where I think this circle is here. You can see we had a little bit of a rollover and then a big move higher. We had a little bit of rollover. That rollover is the digestion of interest rates or a slowdown in the market. So interest rates go up, we usually get a slowdown in the market, which we're going through, and we could very well pull back further than where we're at. We may not be at the complete bottom of this yet, or maybe we are. It's tough. It's tough to know looking forward and going through it. But I think we're in the general location of that circle. This is what's going to come after it, this big move. And not just ConocoPhillips. Every single one is in the same situation. Chevron is consolidating above its big breakout of its consolidation. And ExxonMobil, here's your big consolidation, the blow off bottom. And then we blew out and broke out above that area here. So all the big boys, where the big money comes into to invest, has broken out of their consolidations to the upside. Now, that doesn't mean that we go up immediately. But what I'm doing is I'm shining light on things when the sentiment is crappy. And when the sentiment is bad, that's generally where I take big positions. So there's going to be an energy theme here. I've got oil looks great long term here, in my opinion. This is expensive oil. This is cheap oil. And we're down here in the cheap area where it is good to look at oil in relationship to gold. This is the crude oil to gold ratio. We have a big falling wedge, the 1, 2, 3 hump consolidation. Remember those 3 hump consolidations that we saw in Chevron, 2008, 2011, and so forth? Let's just go back and read. I'll show you. Here's ConocoPhillips. 2008 peak, 2011 bottom. There's the 3 hump consolidation. Do you see that 3 hump? It's important because it's part of the cycle. So the 3 hump consolidation, there's your 3 hump consolidation, the breakout of that consolidation, which also is shown in ConocoPhillips, Exxon, and Chevron's chart. They all have breakouts at this exact moment. And we've consolidated sideways against gold. This here is your slowdown. This here is your slowdown of a declining interest rate environment. And we weren't in an inflationary environment. Now that's changed. We're going to go higher, in my opinion. Crude oil could easily outperform gold here at any second. Now, could we get a false breakdown where I'm wrong for a short period of time? Very well could be. Here is zoomed in. So if you zoom in on this right-hand side here, this is it zoomed in. And you can see we are breaking out to the upside here just recently of a flag pattern. This is crude oil versus Dow Jones Industrial Average. You can see the 3 hump consolidation, 1 hump, 2 hump, the 3rd hump false breakout, shot out of this falling wedge to the upside. We are consolidating sideways just like we are against gold. And we're about to potentially break higher. And this is another one. This is crude oil versus silver. A lot of people say, well, silver is the most undervalued commodity in the world. Well, I hate to say it, but crude oil is cheap against silver. And natural gas is cheap against crude oil. So if I were to do a ranking of what I think is coming in the future, and I were to price everything, I would say that crude oil is incredibly cheap. I would say silver is incredibly cheap. I'd say natural gas is incredibly cheap. And I would say platinum is incredibly cheap. Those are the ones that catch my interest for how cheap they are. It doesn't mean that we will rocket higher immediately, but that's where the value is in the market. And all of these are putting in patterns where we break out and we're doing retests. So here, crude oil could outperform silver in this falling wedge. And what this is telling us, it's not just telling us that crude oil is going to outperform silver. It's telling us a certain market condition is coming. Get that through, your head here. It means that inflation is going to come. It's going to be bad. It's going to be bad. So I want to talk more about oil here. It says every deficit chart that I see for copper, uranium, gold, and other minerals needs huge investments to build mines, equipment, etc. People do realize this is all demand for energy and oil, right? And when I look out, this is from the EIA, IEA, Rystad Energy, BP, and Labyrinth Consulting Services. This is the forecast that were done in 2023. It says here, total world liquids production expected to peak around 2027, but crude and condensate are unlikely to recover the 2018 level, which is right here, this 2018. Crude is this guy here, the dark at the bottom. Crude is the heavy stuff. As you work your way up to other liquids, refinery gain, and NGL, those are all lighter. They're not as heavy. So there are certain investment themes that I look at on the website to take advantage of this potential decline that we're going to see here very, very soon. Now, this is saying an ultimate peak of 2027 for all of it. But Andy, you just showed me all of those deficits that we're running in the minerals. We have to build all these mines across the world, all at the same time that we are going to peak in fossil fuel energy from crude and natural gas liquids. And on top of it, more than likely, uranium won't be able to be mined fast enough before 2030s out here. Yeah, that's a problem. Yeah, yeah, I think you figured it out, guys. It's a huge problem. Now the question is, where should I put money to take part of the investment here? Now, this is the big picture view, the big picture view of what I'm seeing and why I'm so bullish on energy in general for the longer term. Kind of makes sense, right? The way that I'm projecting this. Now, these projections are only projections. We may peak earlier. It might be 2026. It could be 2025. It could be 2028 or 9. We don't know that. We don't know that. And what we're really worried about is if demand starts to outstrip supply, which then brings the price level up, and up. So there are certain stocks or equities out there where I think we've got long reserve life. We have certain assets in terms of heavy oils or light oils and natural gas liquids that will benefit dramatically from this condition that we're going to get into in the late 2020s. You guys have all heard me about the late 2020s. I keep saying this. I think oil is going to go to some ridiculous level late 2020s. This is part of why. And the thing is, the question that you should have as an investor is, how should I play this? Do I go after small caps, mid caps, large caps? Do I just go buy Chevron? Now, here's the thing. When this rolls over, the majority of those companies are going to struggle with their reserves. Their reserves are going to decline. What I did is I searched the entire world for what I think are the best companies with the most leverage in the best areas to take advantage of this. And I would say I'm not in the small caps, even though they could be good. I'm right on the edge of the small mid cap area because they have business momentum. They're buying, they're paid down debt. They are returning capital to shareholders. And this is what's in front of us. So talk about risk reward. This is ridiculous. How the risk reward here is better at this exact moment than what it was when I bought some of those oil companies in 2020. Now that's based off risk reward because the risk has really declined. The reward is still very, very good. But what happened was risk is way down from 2020. 2020, they sold off, 99% from their high because they had debt and a lot of risk. Now that risk is gone, we still have gobloads of upside. And if this comes, if this comes at all, we are so good. And this isn't a short-term play. This is a long-term mindset. This is a once in a lifetime opportunity. And there's other opportunities out there too of what will we go to if this does occur? What will be the solutions? What will be, maybe not solutions, but well, what could be some of the alternatives? Coal looks pretty good too. Keep in mind. Here is Occidental CEO, and I think you guys have heard me say this again, sees an oil supply crunch from 2025. So the Oxy CEO says 2025 and beyond is when the world is going to be short of oil. So what she is saying goes along with this here. This is oil down here. 2025 is right in this area here, and it's going to start to decline. And when she means short oil, it means that the demand for oil is going to exceed the supply, and that price will have to go up. And that's 2025 is literally a couple of weeks away. Now, I'm not saying that it's just going to happen right when we hit 2025. What's going to happen is these pressures are going to start to mount in the system. And we can't tell when we're on top of it. You'll just see it. You'll feel it. Things will get more expensive. Things are going to be harder to get done. Can't afford as much. Prices keep going up. And if they print money on top of this, we're going to get a lot of inflation, boys. It's going to be bad. So here's the long-term and short-term chart for oil. And again, I just keep going back to the long-term. Consolidation, breakout, consolidation, breakout, consolidation. There's that 1, 2, 3 hump. Breakout, and we're right on top of the consolidation. We could run at any second. Now, we could also go sideways, and we could also do a false breakdown. It is possible. But we don't know for sure. And with where this is located, I think this looks really good for a move higher at any point, whenever that point does occur. And this is me kind of zooming in on crude oil futures. We did break a downtrend here recently. We're up around 71.30 or so. We got a little bit of resistance there that we have to break out, but we're breaking the downtrend to the upside. That is the first step of strength. Weakness is when would have been we were breaking down. But if we break out of this and we get up above 75 up here, we could be on our way. Now, I know this is a little bit premature on being bullish on it, but I'm positioned for it. I'm positioning and positioned for it. What I'll say. Charlie Munger fan says, in order to outperform by definition, you have to depart from the crowd. You have to hold a different position, and you have to have resolve to do it, says Howard Marks. And that's exactly what I'm just going over. This is a different position than most people in the market that I just described about oil. Everyone is bearish on oil. Everyone. And you know what they're going to try to do? They're going to try to drag me into their bearishness. They're going to try to drag me into their thought. There's going to be a whole bunch of sayings. Trump, isn't Trump supposed to increase oil? Trump doesn't produce oil. He doesn't do jack. And I just showed you a whole bunch of information of what I think could potentially be coming. It might not be perfect, but as long as it's within a few years, it doesn't matter. It doesn't have to be perfect. I just want to catch that ride. You know why? Because oil is the most important commodity of anything in this world for our modern society at this point. And it is incredibly undervalued. So when I look at it, I say, well, I can take this bet when it's cheap as crap. It's a no-brainer to me. Now, am I going to be right in the short term? I don't know. Doesn't matter. Doesn't matter because if I'm right in the long term, it doesn't matter what the volatility in the short term does. Because if that big thing is coming, that's all that matters. I capture it. It says, yes, it will be the next oil, says Dr. Copper here. So could copper be the next oil? And this is what we've got for 2020 to 2040, and that's what we want to do. You know what the problem is? We don't have the projects in the pipeline to do it. We don't have the projects to just go vertical like this. It's going to probably fall and then go up a little bit and then fall, and as things start to come online. And that is also all energy demand. So in order to get this, I mean, we better be talking to Elon Musk to say, hey, look, how are we going to mine stuff from other planets? I mean, I'm not joking either. Like, that's the extent we're going to have to go to. Warren Buffett says, we never look at any analyst reports. If I read one, it was because the funny papers weren't available, says Warren Buffett. And I know some people ask me, oh, this analyst upgraded to a bot. It doesn't matter, guys. Like, it does not matter. Those reports are completely worthless. I used to read them way back in the day, and they're just garbage. They're all garbage. There's absolutely zero value in those. So what I end up doing is I go read a bunch of presentations. That's it. That simple. It is literally that simple. Warren Buffett does the same thing if you want to know. There's nothing in this world which will so violently distort a man's judgment more than the sight of his neighbor getting rich. And this is J.P. Morgan after the Panic of 1907. That's also what's happening with crypto. Also what's happening with crypto right now. Stanley Druckenmiller says, bulls make more than bears. So if anything, being an optimist about life and about things in general is a great attribute as an investor. You just can't be starry-eyed and naive. Copy says, I'm so proud to have suffered through the historic moment here, and this is the S&P value stocks have declined for 10 consecutive days, the longest losing streak in history. And I've obviously felt it too. My portfolio, I'm not going to lie, this is a pretty big pullback. Uranium, so URANM is down 11.5%, URNJ is down 16.5% for the year. The most experienced people on here tell me a big move is around the corner. I'm tired of the narrative. Well, what I'm going to say is, guys, number one, I don't care what other people say. You need to think for yourself. So don't try to offload it to anyone else. Number two, you should be comfortable in the position, whether it's up or down, because you understand what's coming in the future. What this is telling me is that you have no idea what's coming in the future. Like you have no thesis or you have no conviction, you haven't studied enough. And things sometimes take time. It doesn't happen immediately. So what everybody does is they get super, I'll say they get super excited. They take a position, they put it on, and they think it's just going to go straight up after they buy it. Let me tell you what reality feels like. Almost every position I put on, I am down at some point in the near future. Almost all of them, if you're trying to buy something that is very low, I will be down at some point in the near future because I didn't time it perfectly. Then I ride it, and over time, which could take months or years, it goes up, and then it goes up big, like big. Now, technical analysis can get you in the general ballpark, but it's not perfect. There's nothing in the markets that are perfect. So what you want to do, at least the way that I view it, is you want to use technical analysis and ratios and the fundamentals and researching all the companies from their websites and doing all that stuff. You do all of it. And what does it do? It increases your conviction. It increases your probability of success. of success of choosing the right companies that you want to be buying, choosing the right sector. Because during, when you read some of this stuff, they'll tell you what's going on, the insiders. So it's all important, in my opinion. Here's Gary. He says, here's what's going on with silver. The banking cartel is trying to paint the yearly chart and prevent silver from closing the year above 30. It's anyone's guess if they will succeed, but they will not be able to stop silver from closing well above 30 next year. In fact, they're probably going to have trouble preventing silver from closing above 50 by the end of next year. The saying goes, the bigger the base, the higher in space. That is the largest basing structure I've ever seen. This is why I say $100 silver will be a piece of cake, and 250 or even 500 isn't out of the question. I agree. Now, if you see these big patterns, and let's say you're lucky enough to get it real cheap, like I did, why would I sell? Why do I need to trade it in the short term? Why do people get so worried about the zigs and the zags on a weekly or monthly time frame? What if I could take a different approach than everyone else, which I do, where I take a longer time frame and it gives me the advantage? So I was buying this in 2018. This red candlestick there was 2018. 2019, 2020, I was buying the crap out of it. Bought a whole bunch of different stuff. I did that with a variety of things. And you know what I noticed with really, really rich people? When I mean really rich, I mean like hundreds of millions or billions of dollars. They generally buy things, they accumulate houses, they accumulate assets, stocks. And you know what they don't do? They don't really sell much. They kind of just accumulate stuff when things are cheap and then they ride it on up. What do you think I'm doing? Well, I kind of just accumulate stuff when it's really cheap and then ride it on up. So now at $31, $32, wherever we're at, now I'm sitting on, it's not quite a double yet. And if we break out of this thing, I'm going to be way in the green. Way, way, way in the green. Now, there's other ways that we can play this. You can buy mining companies, and I do have mining companies with I'm putting a little bit of leverage on it, so to speak. But that's kind of all I do. And then what happens is people they're so emotional with their investing that they get scared out of the position. So it's like, guys, just ride this thing. It's such a great long-term picture chart here. It's the biggest structure that like any of us have seen. And there's some other big structures too, if you look around. There's some big structures in oil too, some big, big ones. When these break, they're going to go. Now, do we know the exact timing? I don't think that's important. What's important is you get in cheap, ride it, capture the big move, and I think this is going to be a big, big move. So I only need to ride one big move like this. So we'll see what occurs. The 8 to 10-year natural gas demand surge is no longer pie in the sky dream. It's canon. The only real debate at this point is the price necessary for gas to meet the coming demand surge. Basin boys say $3 to $4 a million cubic foot. I see much higher in this person's opinion. Natty investors have been slaves to weather, no more. And that's all of LNG takeaway capacity and all of the power burn for electricity. And the weather is going to become less and less of an impact with time, but it'll still have an impact. Here's another one here. You must have the discipline and temperament to resist your impulses. That's an emotional investor. Human beings have precisely the wrong instincts when it comes to the markets, says Walter Schloss. Here's Peter Lynch. It's crucial to be able to resist your human nature. So you need to resist yourself. The biggest enemy of long-term investors is themselves. Because when you get patterns like this that are big like this, and you get that market volatility, some people get scared out of it. Same with the oil and all the other stuff. And uranium, people get frustrated. Think of like a little kid. URANJ is down 16.5% for the year. Oh my God, it's the end of the year. Oh my God. It's like, guys, grow up. It's going to happen. That's why we don't put all our money in one little sector. diversify, ride the dang thing. Big picture view looks fantastic. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We've got that question and answer session coming up at 5 p.m. later today. If you'd like to join, use that discount coupon code. Get on there. Ask whatever questions you like. We are going to cover fundamentals of a company. I'm going to also talk about risks in each sector and a little bit about sectors and my opinions around it, and how that correlates with companies, because they're all interconnected here. So if that sounds interesting, and again, we do a whole bunch of different things with all these different question and answer sessions, but this is the one that we're doing this week, or weekend, I should say. And obviously everything's recorded. If you can't make it, no big deal. It's recorded and uploaded to the website that you can view at whatever time you'd like. But that's what I've got. We'll catch you next time. This is Finding Value.